Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, March 26, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Stocks approach new records while NASDAQ dragging slightly, but it feels like we're gonna make new records. It just looks really that way. Yes, you can trade pretty much anything under the sun using my indicators. So I'll show you two examples. One is Sberbank of Russia, one is Reliance Industries of India. Then we'll go into bond overview. For now, junk bonds are confirming the move higher for stocks. We'll look at multiple various bonds. They're still very vulnerable. So we'll look at that. Dollar and gold just kind of standing, stalemate. But overall, I think precious metals on the bear market. Again, anything can happen, so we'll need to have an open mind. I'll show you how to trade oil on 4-hour charts. For that matter, pretty much anything you can trade on 4-hour charts, except for stocks. I would not recommend trading stocks on anything smaller than daily time frame. And for some reason, people don't get it, so I'll try to explain it. And an overview of Bitcoin again, and two of my other newsletters. So you can kind of see there another doesn't even fit. So I have two newsletters. One is Elite newsletter. You can sign up for it. I'm gonna cover all of these stocks. They're mostly large caps. Excuse me. They're mostly large caps and some ETFs. And for my speculator newsletters, I'm going to cover all of these stocks. There's a few new ones like Nova Gold and Benefit Focus. So stay tuned for that if you're subscribed. If you're not subscribed, consider subscribing. Okay, so briefly, how to find me. Go to everyonecantrade.com or MasterChartsTrading.com. Click on products. I have 3 products. Indicator 6.0 for TradingView.com are out. All of my packages include that. You get 7-day free trial. So what are those indicators? These are these lines: green, blue, red and yellow line. I use them exclusively to trade. Notice I use nothing else. I don't use anything of moving average, anything of that nature. I don't even use volume. Notice that there is no volume on this chart. Why? Because it's useless. And yeah, so let's get right to it. So this is S&P 500. Again, this is daily time frame, and vast majority of the time I use daily time frame to trade. Futures are continuous. So what does it mean, continuous? So S&P 500 ETF SPY, notice there are like little gaps. So does it mean an opening gap? So yesterday it was one price, and then in the morning it gapped up. While the futures, see, there is no gaps. This is what continuous means. It's traded almost 24 hours, 7 days a week. It's traded from Sunday night until Friday evening. So this is the difference between continuous security and not continuous security. So S&P 500 ETF SPY is not a continuous security. And if you go to let's say, 2-hour chart, I would not recommend trading it because there are those opening gaps and it messes things up. However, if you go to 2-hour chart of S&P 500 futures, there is no gaps here, you see, and the picture looks different. So you see how different it looks. So this is what I'm trying to explain: is when you're trading stocks, usually you trade on daily charts. Daily means, see, D, this just means that this is an interval. You see what I'm trying to tell you? For some reason, this is very difficult to understand, and if you don't understand this, please ask me. You can go to Master Charts Trading and ask me. Okay, so daily charts, S&P 500 futures. Notice we're approaching new all-time records, and any shorts right now basically get slaughtered. the pullback that I was hoping for, I don't think it's going to materialize. It looks like we're going to make new records Monday. I was hoping we're going to get a pullback towards, you know, the blue line. Why the blue line? It's just a good place to buy. For example, an excellent opportunity to buy with not thinking. You don't have to think, you see. Like here, you can probably, I mean, I lived through this, so I remember there were hundreds of analysts saying that we're about to, you know, collapse to zero, etc. So none of this really happened. So be careful who you listen to. Vast majority of people that claim to know the future, or actually everybody who claims to know the future, are full of it. I don't claim to know the future, obviously. I simply look at the chart and then I make a decision based on that. So this is what I did back in April. I made a decision based on this breakout. This occurred on 29th of April. This is when we started buying. We started buying into our retirement portfolios. We started buying ETFs such as SPY, S&P 500 ETF SPY. You can see they track really well to one another. And since then, really, you can see that we were not stopped out because our stop is at the blue line, on close below the blue line. Okay, we haven't even come close to it. You know, so we're still moving higher, and we're unequivocally in a bull market. Okay, so what I'm trying to tell you is filter. You see, filter who you listen to, and very importantly, have a right tool for the job. So this tool that I have here is the indicators. They're the correct tool for what I'm doing. And they work great. So here's Dow Jones, again, approaching the records, very close to the records. No opportunity to buy. You see, the best opportunity to buy was back in May of last year, 2020, and it's already 2021, and there was just no opportunity to buy this particular security. But there are hundreds, if not thousands, of other opportunities, and that's why we buy or we trade all of these stocks. And look how many stocks we're trading. You can definitely find stuff to trade. So even though the major indices such as S&P, NASDAQ, etc., you can't really get in. I wouldn't be buying up here. I need to wait for a pullback. We were buying back here back in April, May, June of last year. Why? Because it was a good opportunity at low risk. But right now there is bad opportunity at huge risk. So why buy up here? No, you don't want to be buying up here. You want to be looking for good setups within, let's say, Dow Jones or within NASDAQ, but not NASDAQ or Dow Jones itself. You see what I'm trying to tell you? Here's NASDAQ QQQ. So this one is dragging compared to Dow Jones. Is Dow Jones, you can see, almost at new records. NASDAQ is very, not that far off, but it's at what I would call a weak support. So the green line acts as a weak support. I don't reveal the code. I don't reveal how the indicators work. Okay, so this is like if you think about Coca-Cola recipe, it's the same way. So it tastes good, but you don't know what's in it. I mean, it's not harmful or anything like this. So same thing with my indicators. You can use them. I'm not going to tell you how they work because that's proprietary information. Overall, NASDAQ is slightly dragging. Does that mean anything? It's hard to say. Most likely it's because of the weighting. So, Apple is huge within NASDAQ. And Apple is a little bit off from the records. So if QQQ, you can see they're kind of similar. So Apple most likely is the reason why it's dragging a little bit. But that doesn't mean anything really. Correlations are very high. Correlations, meaning that if S&P goes up, NASDAQ will, in well over 99% of the time will also do the same thing. There are very minor differences between the various large indices. So QQQ, S&P 500, small caps, they move in lockstep. They usually move together. Now, these stocks here, what I'm showing here, speculator stocks, I look for specific patterns which do not correlate with the general market. So these are much less correlated assets, or poorly correlated assets. So this is just my personal preference. I like to trade things that don't do the same thing as the general market. But with QQQ, it looks pretty much similar to the rest of the indices. Here's a small caps IWM Russell 2000. So latest wonderful, just incredible opportunity occurred right there on 24th of September. Good for 62% gain. And again, notice how easy it is. People are intimidated by technical trading, and they start thinking about things like price to earnings ratio, who is the CEO, what is the pipeline of the products, all kinds of things that seem relevant, whereas in actuality they are not. Ignore everything, trust me. All you need to know is the price. Is the price doing what you want? Okay, so if the price is doing this, where I'm hovering, it touched the blue line and closed above it. This is all I need to know. I don't need to know anything about price to earnings, etc., etc. The fundamental information. And if you listen to my previous videos, I have a big problem with fundamental analysts. The reason being is because they usually are quite wrong. So let me give you another. I'll show you this again. Twitter. So here's Twitter. And I have a friend who thinks he's an analyst. And you see how easy it is? My thing is this is the only thing I would have said buy here on November 4th, actually November 4th, during the elections. And then we had the real Donald Trump got suspended on 8th of January. For some reason, it took so long. But anyways, and he wrote, I remember he wrote it, that because of the suspension of real Donald Trump, the earnings for Twitter will decrease. So we must short Twitter now. So you can see that this would have been completely wrong, because new records were made a few days later, also new records, and then it just continued higher. So overall, ignore everything. Ignore price to earnings, ignore the news, ignore the earnings reports as well. Some people would argue with me, but truth is, if you have also earnings reports, I'm going to put them on if you're really interested. Show earnings. There we go. So earnings. All right. So let's look at earnings of Twitter. They're barely breaking even. Okay. This was the earnings on the 29th of October. Let's see what they're doing now. Well, they are about breaking even. Actually, the price, if anything, the earnings went up after the suspension. Does that make any sense to you? No, it doesn't. And that's why I ignore earnings, you see? Okay, so let's continue to international stocks. Here is Sberbank of Russia. Apparently a company that's been around for many years, since before communists took over in 1917. They're still around. I lived in Russia until I was 12 or 11, I forget, maybe 13. Do you see the same thing here? So no difference. To me, all of these things, all of these stocks, they all look the same. I can just get rid of this name. It could be anything here. So the thing that I need to watch for is the following. Is this a daily chart? Yes, it's a daily chart. Is this a stock? Yeah, it's a stock. So stocks are traded on daily charts normally, or maybe weekly or monthly, but definitely not on hourly. Okay, I wouldn't trade Sberbank on hourly chart. Okay, because like for example, this is an hourly chart here. There are those gaps, and the gaps are not good. So on daily charts, it looks pretty straightforward. So if I was trading Sberbank, for example, if I was in Russia right now and I had an account on this Moscow exchange, this is what I would have done. On November 10th, I would have bought it. Okay, why? Because this is it right there. This is the only reason why I would have bought it. Because there is a clear breakout. We can put on earnings. Would they matter? Let's see. Okay, so they are making money. Good to know. Okay, 11 whatever dollars. Here they're making less money. Good to know. Does it matter? No. You see? No difference. It's the same thing always. So we're buying a close above the blue line. Our stop is below the yellow line for stocks on daily charts. Any questions you have to ask me. Go to help and then contact. See, you can contact me very easily. So this is how I would trade any stock. In this case, Sberbank, the biggest bank in Russia. Yeah, and you would have made how much money you would have made if you bought it on November 10th? You would have made 25% by now. I think it's a pretty good deal. Yeah. All right, let's look at an Indian stock now. And I've never heard about this. I just Googled what's the biggest stock in India. So apparently this is the biggest stock in India, Reliance Industries. I think there's some sort of a conglomerate. How would I trade it? So right this instant, it looks promising. And if I'm gonna turn on my future. So I have a new product. I have a 6.0 indicators. The old ones are 2.0. I have the 6.0. 6.0, what's nice is that you can customize. So you can turn on or turn off. Like you can turn on current, future, and you can change how much future projection you get. So I usually set it at 50 days, 50 candlesticks ahead. So projecting into the future for this Reliance Industries of India, you can see that the blue line, which is a great place to buy, is coming up towards the price right now. At the same time, the bearish levels are also coming up. So if we were to buy it sometime in the future, I don't know, let's say sometime in April, let's say, it's a good estimate that it's going to come down to that price. So I will do something like this. I would buy it. If it comes down, bottoms here, it needs to bottom. Okay, so bottoming pattern. What's bottoming pattern? A bottoming pattern would look something like this, where I'm hovering. So a price comes down below the blue line and then closes above it. Okay, so this is a bottoming pattern. And notice that this particular trade back in February 2020 would have failed as the whole market collapsed. So where let's say you bought it right there, you actually probably made a little bit of money and maybe we were able to get stopped out. So if you for some reason didn't exit right there on 25th of February, you would have need to exit right there below the yellow line. Okay. Yeah, about 25% of your trades will fail. Okay, you will. If you heard about something called profit factor. So profit factor means how much money you make divided by how much money you lose. So your profit factor needs to be positive, and this is what makes your profit factor less positive, losses, and they will happen. So I don't know, You know, some people just don't like to hear it, I guess, but I don't care. Anyways, so Reliance Industries, so last great opportunity to buy was back in April 2020, right there. And in fact, it's exactly on 22nd of April, right there. How much money you would have made? You would have made good money. That's a 77% move. And actually, you would have still been in the position, because I usually get in and I would just trail at the blue line. I would take profits. So usually I take profits when the price comes up above the green line and it comes below it. So somewhere in the October here, I would have taken some profits. And again, it's coming towards the good buy levels. So let's watch for a opportunity to buy somewhere in the April-May region. And also we need to see if when it comes down, it will bottom here and not continue lower. What worries me about this chart is that the bearish levels are actually not going to be that far off. This is the bearish levels. You see, they're only going to be about 11% away. So you will need to kind of make that decision when or if we get there. Okay, moving on to junk bonds. So here are the junk bonds. Another reason why I did not short the general stock market is because of the junk bonds, because they broke out here in April of last year, 9th of April, versus SPY S&P that broke out 29th of April. So junk bonds are low quality bonds, and they correlate. They'll move together with stocks in lockstep. So for now, I'm not seeing much divergence between stocks and junk bonds. What worries me again is this, the way the indicators are coming up. And this not exactly a great pattern, because now we're seeing a narrowing of a trading range. So before, the distance between yellow and green lines was like 17 points. Right now, the same distance is only 12 points or 13 points. So, and it looks like in the future, this actually might narrow even further to like 6 points. So this type of narrowing of a trading range is, it often happens when the security is about to change the trend. So I'm watching for a reversal for junk bonds. This could be quite bad, actually. If the junk bonds reverse into the bear market, stocks could be next afterwards. Looking at various other bond funds, I already showed this chart. So this is municipal bonds. Again, very narrow trading range. So notice how wide it was before. It was like 12 points, and now it's half. It's 6 points. You see, the future potentially looks even more narrow. Look how narrow it becomes, let's say in June. I mean, it's nothing. You see, it's 2 points. So what this means is that a reversal into a downtrend is quite likely. Okay, municipal bonds, this is not very high grade, but it's pretty decent. And also, the fact that they're pretty good grade, the fact that they're higher grade bonds means nothing. And also, even though they're high grade bonds, they're still being sold. In fact, the higher the grade right now, the worse they're doing. I'm going to show you in a second. So here's MBB. This is mortgage-backed securities, the infamous mortgage-backed securities in an ETF. You can trade it. MBB is tradable. So this one collapsed even earlier. I showed this already. So again, notice how wide the trading range was. 4 points. So back on the 25th of February, price came down, touched it, but nothing happened. Continued lower, and then there is the breakdown where I'm hovering. right there on the 18th of March. And looks like we're about to continue lower. This is a very bad looking chart. So yeah, this is what happens when you have a narrow trading range. The price has an easier time to change the trend. Whereas before, we had no doubt it was in an uptrend. Or let's say, let me see, where was it? There's the beginning of an uptrend right there, sometime in March of last year. No doubt in an uptrend, but now we're seeing this reversal. So this is a reversal for sure, okay? It's quite possible that we will get a bounce. So I'm thinking something like that maybe. And the reason being is because there's the red line right now. So it's quite reasonable to expect a bounce towards it. Will it actually happen? I think you know the answer to that. Nobody knows. LQD, so again, investment grade corporate. And if you're selecting your securities to invest in based on the quality, based on the fundamental ideas, such as what is the quality of these bonds? I don't know. To me, it looks like a faulty assumption, faulty way to do it. I think what's important is to look for what is going up. So in this case, what again I'm going to show you the same thing is because notice how trading range narrowed. It was 22 points here just a few weeks ago, really. And now the same trading range is half, you see. And then additionally, you can see it is going to narrow most likely even more. You see how narrow it is? So a reversal into the downtrend is very likely. In this case, the reversal into a downtrend would be a close below the red line, which is like right there. So even if price does nothing and just kind of trades sideways, it will get to the bear market in a few weeks, in a few days. You see? So the bear market for LQD, investment grade corporates, are literally right there. Should the investment grade corporates continue lower, what does it mean for the general stock market? It's not a great thing. Investment grade corporates are not that far away from junk. Okay, and if the junk bonds go, and the investment grade corporates go, stocks could go next. Here's how it looks like. Here's TLT. Some of my clients actually took this trade. Congratulations. On the date of insurrection, 6th of January. And I never get tired of repeating. On this date, not because of the insurrection, but because it happened to be the date when it broke down. Okay. Great opportunities to sell short. This is treasuries. This is as good as it gets. This is 20 plus year treasury bond fund. So this is as high quality as it's humanly possible right this instant. I think there are some European bonds I'm sure you'll find pretty good quality as well, but in the United States, as far as I understand, long dated treasuries are super high quality and they are super collapsed right now. And this happened, clearly on the chart. So this is why I like to see my indicators, and without really knowing what it is, I can see that it broke down. Like you can get rid of this name there, and I would have still shorted it here. So right now, what we're seeing a bounce from the lows. I don't think this bounce is done. I think we might continue bouncing a little bit more. Again, I'm thinking that the red line would be a good place for the bounce to continue. So we're looking at, somewhat significant move sometime into April. At which point I would sell it again. I would short it again. provided the price action confirms. So what does the price action need to be when you're selling short? So we need to do the opposite. Whereas before the price was coming down from the top, it would bottom, and then we would be buying here. In this case, we need to reverse our thinking. So the initial breakdown here on 6th of January, and then an excellent opportunity right there on 27th of January. So what happens is it comes up towards the resistance in this case. Red line is now resistance because we're coming from below. And this is where you short. So it needs to touch the red line and then close below it. Touch the red line, close below it. So this is your signal. So what we need to do is we need to see a price continue higher, touch the red line, close below it. Here's a 7 to 10 year intermediate bonds, treasury bonds. Again, huge, very, very good quality, enormous, wonderful quality bonds are the first to collapse. How do you explain that from a fundamental perspective? This thing broke down 16th of February, pretty straightforward. It just broke down. I've never even looked back. It just collapsed. Okay, so if you were able to sell it short, then you got nice, 3% move. And if you're doing, let's say you bought puts, you can buy calls or puts. So calls go up, puts go down. So if you bought puts, then you're plus probably at least 3 times. So we're looking at least 10 to 20%, I guess, up if you're trading options. Here's just inverse. I'm going to show you the actual treasury bond yield. So there's treasury bond yield, treasury bond funds. They move one opposite to one another. Here's the yield breaking out on the date of insurrection yet again. Not because of the insurrection, but because of just the way the chart was looking. It was about to break out, and it happened to be on the date of the Capitol riot. The 10-year Treasury yield broke out a little bit later. It broke out on 11th of February. I have no idea what happens on 11th February, but you can look it up. So generally speaking, same way to treat securities. Okay, moving on to dollar index, DXY. Here's dollar index. I trade precious metals, so I need to know what's happening to the dollar because precious metals are traded in dollars, in the United States at least. So dollar index overcame weak resistance, is approaching strong resistance. Strong resistance is at 93.5. Future projection is showing further narrowing of the trading range, so chances of a reversal are huge. Okay, so we're looking in May, I'm guessing. This would be just a wonderful opportunity for a breakout. 17th of May. Make a comment. What happens on 17th of May? When dollar index is moving up, precious metals get cheaper. So here's gold futures on the daily time frame as usual. So gold futures were trading in an uptrend. We had several killer trades way back when. I mean, this is all opportunities to buy. One trade was 32% gain. Here's another one from 23rd of March of last year. It was an enormous move in our favor. But then something started to happen. I decided, and I started not to like this. Even as far as 9th of November, huge red candle, another huge red candle on 8th of January. So I did not like this action, and we broke down into a bear market. I think gold is in a bear market right now. And when I say bear market versus bull market, bear market just means a security, a tradable stock, something that you're trading is making lower lows and lower highs. Whereas in an uptrend, a bull market, a security is making higher highs and higher lows. So what I'm proposing is we're now in a bear market, and maybe we'll bounce. In fact, there's a really strong chance we will bounce. So again, I'm projecting action into the future. My stop currently is, above the blue line, but this stop could move higher, you see. So there is a good chance we may still, try to move higher. The question is, will we move higher back into a bull market? And I don't hate gold. I don't hate anything, really. I'm very objective, you see. I like to see objective evidence. So if objective evidence shows that, all of a sudden today price of gold is 1731, but let's say in 5 weeks or 4 weeks we'll have a price of gold above 1933. How do I know that? Because I'm reading it right there, 1933. And it breaks out above it, it closes above it, no problem. Then we'll close our shorts and we'll start buying long. We're buying again, you see. Right now we're selling it short. So right now I'm thinking gold will continue lower, possibly after a bounce. So the best case scenario, I think, will bounce towards this level, so around 1820 or so. We might bounce towards that level, but once again, that would be an opportunity to sell it short. You can also buy puts on GLD. This is what I did. I bought puts. I'm going to show you. I bought puts on GLD. Okay, I actually still have it open. It's from 2022. They're expiring 2022. Okay. Silver, same thing. Let me see where it is there. Silver, same general thing, but it is stronger because silver actually made a new record on 1st of February, whereas gold was nowhere near the record on 1st of February, and it continued lower. So they're most likely going to move together. If silver continues lower, gold will continue lower. If dollar continues higher, it will pressure gold and silver, which is what's happening now. Here's gold miners. Okay, so once again, gold miners are obviously tied to gold. Technically, they haven't yet broken down, but look how close they are. Even if they just continue sideways, they will just enter a bear market by closing below this support resistance red line. So I'm thinking we're gonna bounce maybe a little bit higher for gold miners, GDX, somewhere to this vicinity of 36.50. But once again, this would be an opportunity to sell it with a stop above the blue line. Okay, find out more about these indicators at MasterChartsTrading.com. Right, moving on to oil. Here's oil on daily time frame. Now, the last time to buy oil on daily time frame was again back in May of last year. If you like to trade oil, you can go to 4-hour charts, for example. And here what I wanted to show is on 4-hour charts. 4-hour charts are much more volatile, and you will have many more whipsaws. So if on daily charts, where I normally trade, I get about 75% success rate. In other words, 75% of my transactions end positive, and some end quite highly positive, and 25% of my transactions end negative. And usually those negatives are quite small because I cut my losses. So to make money in the stock market, you need to cut your losses and make money on your wins. And right now, oil seems to be on 4-hour charts. Okay, again, very important. 4-hour charts, it seems to have broken down. So, but then again, the stop is right there. So I think Monday I could be completely wrong. But for now, I mean, it does not trading, but right this instant, it seems that oil is in a downtrend on 4-hour charts. And wrapping up with Bitcoin, here's Bitcoin on daily charts again. So this thing is just monster. We've been trading it, and you can see opportunities to buy. For example, latest good opportunity to buy was on 28th of January. But before that, we had just a killer, absolutely killer move. There it is from the May of last year, April, May of last year. Notice the simple close above the support resistance blue line, and you got, my God, look at this move. 532%, even more, 570%. So it went from like 8,000 here to 56, to over 60 actually. Okay, big move. Right now you can look on 4-hour charts. So 4-hour charts, you can see it's actually, as we speak, it's about to break out on 4-hour charts. If you like 4-hour charts, we're about to break out. We almost made it to the bearish levels on 4-hour charts, but I guess not. I guess we're about to continue higher again, which is fine with me. I really don't care either way. Okay, so go over to MasterChartsTrading.com. You can also go to everyonecantrade.com. It will go to the same place. I have a new upgraded product called Indicators 6.0. Indicators 6.0 show the future projection of the indicator. So this is current projection and this is future projection. How can you use it? You can use it to identify. Well, let me give you a couple of examples. So I already showed you gold, for example, or gold miners here. So I'm waiting for to see if my projection is correct. It's correct quite often, and we'll see if we'll short it again here in sometime in April. So the this 6.0 indicators, you can also just turn off the future as well. So you get 2.0 and 6.0. You can use both of them. The speculator includes both of my elite and speculator newsletters, and for example, what kind of stocks we cover. You can see there's a whole bunch of stocks we cover. We trade in elite and speculator newsletters. And the Speculator Pro has now the advanced scanner. So advanced scanner means you can find stocks that are doing all kinds of things. So we scan all of these stocks, thousands of stocks. There are 9,000 stocks that we scan, and then we get really cool potential setups for the newsletter. Okay, that's it for this week's recap. Again, if you have any questions, please let me know. Thanks for watching. Have another great trading week. Bye-bye.